it time to start loading up on some of the big tech stocks such as Facebook, aka Meta, Apple, Snap, Amazon, all of those big names that have been well and truly beaten up over the last year or two, some of which are still down 30-40+% from all-time highs? Or should you be waiting a little bit longer? Well, these are some of the most popular stocks in the whole world, so that is what we're going to be speaking about today. What is happening, investors? It is your boy Jack. I am not a financial advisor, and today has been a decent day for stocks. You will see the headline in front of me is S&P 500 gains to start the week as Apple and other tech shares rally, with some live updates in there. And it's been an okay day. Things have actually come down towards the latter half of market open, particularly in the Nasdaq. It was up nearly 1%. Now I think it's less than 0.5%, but still, as of recording, the Dow, S&P and Nasdaq are all in the green, which is a good sign for a Monday. Apple received some nice initiation from Goldman Sachs, the first one since 2017. We are seeing some Snap news. Don't play. This is my video, not your video. We're seeing some Snap news. There's been some Meta news as of late as well. So they are the things we're going to be speaking about today. We'll take a look at the stock's history over the last year or two, put up against each other in regards to who is performing the best and worst from a share price point of view. Really quickly, guys, could I ask you for an early thumbs up on the video? Helps me out an awful lot. And if you do end up enjoying, feel free to subscribe for more content, such as the video you're going to see in today's video. We're trying to bring a wide variety of content to you. Only earlier today, I uploaded 4 dividend stocks to consider buying now with a 5 to 7% plus dividend yield. So maybe check that out after this video. Also, if you are interested in getting some free shares, click the first link in the description or in the comment section down below. Sign up to Webull, deposit $100. Literally get some free money for yourself. You can sell those shares, go invest that money into Apple, Facebook, whoever you want. So stocks rose on Monday, building on last week's gains as investors scooped up battered technology shares and interest rates stabilized. Rising tech names lifted the Nasdaq and S&P by 0.4% and the Dow Jones up about 0.25%. Apple led the tech sector's gains, jumping about 3% after Goldman Sachs initiated coverage with a buy rating. The iPhone maker already accounts for about 7% of the S&P. Alphabet, Meta Platforms and Netflix also gained, boosting the tech-heavy index. So let's just start off with Apple, because I know this is probably one of the most popular ones among people viewing this channel. It is an absolutely gargantuan sized company, but it still has been beaten up, as have a lot of the other big stocks. If we just take a look at the stock chart here, looking at the daily chart, you can see, boom, from those peaks of about 183, still down. But very interestingly, Goldman Sachs comes out with a 30% target to the upside for Apple, which would actually represent a new all-time high for the company, despite, downtrending as the rest of the market really has. They set a 12-month price target of $199 per share, suggesting a possible gain of more than 33%. Analysts said Apple's installed base growth, secular growth in services, and new product innovation should more than offset cyclical headwinds to product revenue, such as reduced demand in the iPhone, PC, and tablet categories. Me, myself, I am an Apple lover. I still have an iPhone. I still have a Mac now. When it comes to my main PC, it is not Apple run. I just think there's a lot more powerful options out there when it comes to building your own Windows-style PC. But I absolutely love all of Apple's products, personally. The market's focus on slower product revenue growth masks the strength of Apple's ecosystem and associated revenue. So, I mean, this is a very big deal. Goldman Sachs, for the first time, initiating a buy rating since 2017 on Apple. And it is since they have already come up from those recent lows of 124. And that's about 24-25% in the last, 2 months, just slightly less. Now, there is more than just Apple out there. So, rates have stabilized, with the yield on the 10-year Treasury note last trading flat after briefly rising above the psychological 4% level at various points last week. An upward move raises borrowing costs for consumers and could signal a drop in investor confidence. So seeing that flatten out would be a good thing for us. Stocks are coming off a positive week that saw the S&P flirt with its 200-day moving average, a key momentum indicator watched by traders. A dip below that level could signal more selling ahead, and on the contrary, if it continues upwards above that 200-day level, we could see some more upward momentum, which would be very welcome. And we have had a nice little run here for the most part in a lot of these stocks. You see Apple from the recent bottoms going up. We see Meta having a nice run as well, and there's been plenty more big names in there. Amazon haven't quite had the same effect just yet, but they're on their way up. And again, more names like PayPal, near identical chart to Amazon. Spotify, a very nice run up. Big tech is coming back to some good days in general, so you would understand why people would be interested in adding to their positions now. I think we're basically seeing a little bit of a carry through momentum that level had, said Truist co-CIO Keith Lerner. What you're seeing more broadly is just a little bit of follow through from last week's rally, and you're seeing the rally being led by the growth areas which are more sensitive to interest rates right now. And then important catalysts this week, this is very important, include congressional testimony Tuesday and Wednesday from Federal Reserve Chair Jerome Powell, everybody knows Big Powell, who will guide investors and lawmakers on how the central bank is thinking about inflation and its rate hiking campaign going forwards. I mean, this is the single biggest thing keeping stocks down as of right now. Now, of course, there's more to it than that. They're not keeping them down on purpose. They are trying. But some good news for us investors, again, could lead to our positions going up and could lead to these big tech stocks in particular going up. And then also, February jobs report on Friday. After January's blockbuster report showed the economy added 517,000 payrolls. Economists polled by Dow Jones expect 225,000 jobs added last month, which again would be very good for stocks all across the board. It really would be. Now, another one of the big tech names, we see Snapchat. They jumped to an 11% gain as potential TikTok bans gain strength. Now, I don't tend to put too much weight on this because this seems to be an article that I see every month at one stage or another. And I mean, you see what that jump looks like here. It's very, very small in the grand scheme of things. These guys were bet to the absolute ground over the last while. And this wasn't even the 2020 crash. This was just an organic downward movement all in all from Snap. So right now, to me, this isn't the company I have any personal intentions on investing in. But if you're a trader, there is a lot of swings to be made with this company here. And you know, there still is some long-term potential. But at the end of the day, if there is TikTok bans, is Snapchat even going to raise in popularity all that much? I don't know, especially when you see, you know, YouTube Shorts now. Facebook has a large video platform at this stage as well. I don't think too much of it, but a big day for Snap nonetheless. Now, when it comes to Meta, again, Meta has had a nice little run from their recent bottoms. If I get that up for us really quick, they've been on a fantastic run, one of the best recoveries really, from $88 a share all the way up now to $185, again in the span of about 4 months or so. It's a fantastic move for the company. The most recent huge gap here from 152 all the way up to the 185s. Again, we could definitely see some weakness come back here. They're at relatively overbought levels on a grander scheme. I would not be surprised with a pullback whatsoever. But if we could see a grander upward move happening here, that would be fantastic. Recently, we saw Meta is slashing prices on VR headsets. So the Pro's price will be chopped to $999 from $1,499. And the 256GB version of the Quest 2 is being reduced to $429 from $499. Meta explained the price reductions as a way to create hardware that's affordable for as many people as possible and make the technology available to even more businesses and professionals around the world. Overall, is this going to positively or negatively impact the balance sheet? It's very, very difficult to say right now. If they're still making a hefty profit on this, I think it will be positive. A lot more people would be willing to spend these prices than the previous ones. And if it's the start of a chain of downward price in these things and they can still keep, you know, their profit margins decent, it could definitely be a good thing for the company. And we also got this piece of news just today that WhatsApp agrees to be more compliant with EU privacy rules, which is very important. And in January, WhatsApp was actually fined just under $6 million by Ireland's Data Privacy Commissioner after the agency ruled the popular messaging platform infringed upon European Union privacy laws. Now, WhatsApp isn't exactly a moneymaker for Meta anyway, but still, we need to see things like this. You can't be running around breaching laws to this degree. It's just not the way it works, my friends. Now, if we look at how some of these big names, I have Facebook, Apple, Amazon, Snap, and Google up in front of me. On the 1 year chart, Apple is the only one up at all, and that is at 17.76%. In second place is actually Google, down 24%. This is on the yearly chart for some of the biggest tech companies in the world. They are still hammered down in the grand scheme of things. Snap is obviously losing by a long shot, down 80%. And then we also have Facebook at negative 41% and Amazon at negative 45%. So you can see why people should be following these stocks even more closely than usual. The potential for huge upward moves and buying these companies 25 to 50% cheaper than they were only a year ago offers some really, really nice potential profit-wise. Much more than the average 8, 9, 10% you would look for on a yearly basis. It might take a year or two to begin happening, but at some stage you would definitely expect to be able to pick these companies up at these prices to work out for the best. Me personally, I think that some of these stocks are at okay price points to add to your positions. I don't see anything wrong with dollar cost averaging at these levels as things are looking a little bit more positive, but I definitely would say it's far too early to go all in. But anyway, my friends, that is my thoughts on what's going on with big tech right now. If you watched this video all the way till the end, could I please ask you to hit that juicy like button and subscribe if you want more content like this. Also, just drop me a comment, let me know. All that helps me out so much. And please, I just want to let you guys know, you are all true legends if you watch till the end. I reversed the order of what I normally say there and it threw me off. Also, if you are interested in those free stocks, make sure to hit that link in the description or the pinned comment below. Sign up, deposit $100. Literally is that simple. You get some free money for yourself. It's a juicy deal. Anyway, my friends, I hope you all have a beautiful, blessed day. I'll see you for another video very soon. Peace.